Something seismic is happening, and most people are still asleep to it. The US dollar, long seen as the unshakable pillar of global finance, is now in free fall, suffering its steepest collapse in more than half a century. While the headlines distract and politicians squabble, the real storm is unfolding quietly. Behind closed doors and across oceans, China has been unloading US debt at a staggering pace. And on Wall Street, a chilling whisper is making the rounds. Sell America. What once seemed unimaginable is now accelerating. Nations that built their economies on the back of the dollar are quietly retreating. Global investors are pulling out. American capital is fleeing abroad. The trust that once glued the global system together is crumbling, and fast. In just the first 6 months of 2025, the dollar has lost 10.8% of its value against a basket of major currencies. $1,000 on January 1st? By July it's worth $8.90. That's not just a hit, it's a hemorrhage. And this isn't abstract. This is about the fabric of global power starting to tear. This isn't just the worst start for the dollar in 50 years. It's a flare in the sky. A warning. Not since the United States cut ties with gold in 1973 and dissolved the Bretton Woods system has the dollar looked this vulnerable. And this wasn't triggered by one bad policy or one chaotic year. This is the end result of a long, slow decay. Decades of reckless spending, soaring national debt, endless stimulus, and a world that's starting to doubt America's ability to hold it all together. That doubt is loudest in Beijing. While Washington bickered over trade deals and tariffs, China acted, with discipline, with intent, and with stealth. In April 2025 alone, Beijing offloaded $8.2 billion in US Treasury bonds. But this wasn't just a transaction. It was a declaration. They're backing away. The retreat has been unfolding for over a decade. In 2012, China held $1.3 trillion in US government debt. By April of this year, that number had plummeted to $757 billion, a 44% cut. Over $600 billion gone. And they're not slowing down. China is turning inward, investing at home, insulating itself from dollar dependence, and preparing for a future where the greenback is no longer king. The real danger isn't just China's retreat. It's the domino effect. If other nations follow, if foreign central banks start dumping US debt, the consequences will be brutal. America's entire economic engine runs on borrowed money. Treasury bonds are the bloodstream of the US government. They fund everything: military operations, healthcare, highways, schools, social security. Every year the government borrows not just to spend, but to survive. And it only works because other countries are willing to lend. But what if they stop? Right now the US national debt has ballooned past $37 trillion. Interest payments alone are devouring federal budgets. And the entire system depends on a single fragile assumption: that the world will keep buying American debt. If that belief breaks, the fallout will be catastrophic. The US would face a brutal choice: either jack up interest rates to dangerous highs to lure back investors, or print even more money and risk unleashing runaway inflation. One choice tanks the economy. The other destroys the currency. Either way, the American financial machine grinds toward a wall. If the Treasury bond market breaks, everything else breaks with it. No borrowing means no spending. Government programs stall. Agencies go dark. Military paychecks stop. Infrastructure rots. Benefits freeze. The idea of a US default, once unthinkable, starts to look disturbingly possible. And all the while, China isn't just stepping back. It's executing a new strategy with chilling precision. While the Fed fumbled interest rates and Congress played political games, Beijing turned its gaze inward and began accumulating gold, silently, relentlessly, and at historic levels. Over the past 3 years, the People's Bank of China has bought more than 210 tons of gold. Not for show, not for safety, for leverage, for power, for a future where the dollar no longer dominates the world stage. This isn't a blip. It's a reset. The world is shifting. The fall of the dollar is no longer theoretical. It's already unfolding. What we're seeing isn't market volatility. It's the beginning of a new global era. China is orchestrating one of the most aggressive gold-buying operations the world has ever seen, acquiring about 80 tons a month, roughly $8.5 billion worth. And they're showing no signs of stopping. These aren't symbolic moves. This is a reconfiguration of global wealth. As of early 2025, China's official gold reserves crossed 2,300 tons. But many experts believe that's just the surface. The real stash may be far larger, quietly amassed through state-controlled banks and offshore accounts that dodge international financial radars. This is not just about finance. It's about sovereignty, trust, control. While the US clings to the illusion of endless borrowing and unshakable dominance, China is preparing for a post-dollar world. One where power flows not through green paper but through real, tangible, enduring value. Gold. The world is moving on. The only question left is, Will America wake up before it's too late? Gold doesn't answer to governments. It doesn't care who's in office, what the Fed says next, or which way the polls lean. It's immune to political cycles, untouched by stimulus gimmicks or policy blunders. You can't print more of it, can't inflate it away with promises or debt ceilings. When markets crash and currencies wobble, gold simply endures. That's why it's back in focus now, not as some speculative bet, but as a lifeline. A shield. A response to something deeper that's shifting beneath the surface. Because gold is where you go when trust begins to break down. And right now, that breakdown is accelerating, especially in the eyes of the world's second largest economy. China has been watching the US weaponize its currency, watching the dollar used not just to trade but to punish. Whole nations disconnected from the financial system, locked out with the flip of a switch. Sanctions, asset freezes, trade manipulations, all executed through dominance over the dollar and the global plumbing of SWIFT. The lesson wasn't lost on Beijing. The reserve currency is no longer neutral. It's not a marketplace, it's a lever of control. And that control can turn on anyone who deviates from Washington's script. So China is making moves, big, fast, and deliberate. Pulling away from dollar dependency, buying gold by the ton, building reserves not for speculation, but for sovereignty, for insulation. But what's striking is that China is not alone. Across continents, in the high floors of private banks and the hushed corners of family offices, a quiet, coordinated shift is unfolding. Billionaires are moving capital offshore. Hedge funds are diversifying away from American exposure. The very architects of modern financial markets are no longer betting on business as usual. The year began with a kind of cautious hope. Inflation was tapering. The recession talk was fading. Analysts whispered about soft landings and gentle rebounds. But by summer, the ground shifted. Major U.S. fund managers started cutting dollar positions. The financial press dubbed it the Sell America moment. This wasn't noise. It was signal. A growing recognition among insiders that the trajectory of U.S. finance is no longer guaranteed. Policy chaos only fueled the flames. Unpredictable trade tensions. Political brinkmanship. Diplomatic rifts with allies. The air grew thick with uncertainty. Polls captured the unease. More than half of Americans now believe their financial lives are getting worse. Less than a third believe in a near-term recovery. But this isn't just mood, it's motion. The ultra-wealthy are taking action. Rebalancing into gold, buying real estate abroad, applying for second passports. Visa programs that offer second citizenship have seen demand from Americans spike over 1,000% since 2020. This isn't a retreat, it's insurance. Asia tells a similar story. Wealth managers in Tokyo and Singapore are rotating out of U.S. equities. Capital is flowing into Japan, into Europe, into China. BNP Paribas confirmed the trend. This isn't panic, it's precision. A strategic shift away from what's increasingly perceived as American risk. Bank of America tracked nearly $9 billion fleeing U.S. markets in a single week. That's not volatility, that's exodus. And while money's leaving, something bigger is leaving with it. Conviction. Look at Japan. For years, investors saw it as old, slow, stagnant. But now Japan is attracting capital at record levels, $4.5 billion in 1 week alone. Why? Because it's consistent. Because it's governed with discipline. Because in a world craving predictability, Japan suddenly looks like a safe bet. Europe's not far behind. Despite political imperfections, it offers regulatory clarity, fiscal investment, and a vision that extends beyond the next headline. Infrastructure, renewables, defense, long-term plays, not short-term fixes. That steadiness is drawing serious capital. And yet, even in retreat, the U.S. still sees inflows, from abroad if not from within. Foreign investors funneled nearly $4 billion into American equities during a recent cycle. But their optimism has limits. U.S. Treasury bonds, the gold standard of global safety, just suffered their biggest outflow since 2020. Even gold, the traditional hedge of last resort, saw a rare weekly sell-off. Investors aren't just buying safety anymore. They're scrutinizing it, choosing it, recalculating the definition of safe. Because this isn't a portfolio rebalance. This is something larger. A slow-motion reconfiguration of global capital flows. In the first half of 2025 alone, over $100 billion poured into European markets, 3 times more than the same period last year. Meanwhile, $87 billion left the U.S., and it's not just money, it's belief. For decades, the assumption that America would always lead, always bounce back, always attract the world's wealth. That assumption sat at the core of the global financial order. But now, for the first time in living memory, that certainty is cracking. The new landscape isn't about dominance, it's about reliability. The world isn't chasing the strongest hand, it's moving toward the steadiest. In that world, Europe and Japan, not the U.S., are starting to look like the new centers of gravity. Bank of America has already made its call. It's restructuring its entire European trading apparatus, planting its flag deeper into the continent. Not as a hedge, as a strategy. A bet on the next chapter. So the question isn't whether the shift is happening. It is. The question is whether it's reversible. Can Washington steady the ship, rebuild trust, realign policy with long-term vision? Or has the inflection point already passed, quietly but definitively? Because something foundational is changing. And for the first time in decades, the search for alternatives to American leadership isn't happening in the margins. It's happening in plain sight.